Okay, folks, welcome to another week. Happy Sunday. Happy Mother's Day to the mothers out there. Gentlemen, I'm certain that you did the right thing today and made sure she felt number one. So we have a bunch of people in, still building. We'll go over who's in the room at current. We're seeing the futures open up, gapping down here a little bit. Down about a little over a third of a percentage point on the E-minis, S&P E-minis. Let's let this settle down a little bit. Let's say hello to some people. Who do we have? Oliver. Hey, Oliver. Trent. Hello, sir. Trader Isaac. A gentleman. Mr. G, I hope your skin's clearing up. Yeah, today was the first day I was able to shave in about a week. And it still looks like I have a low-grade measles, but it's getting better. Thank you very much. Joseph, appreciate your work and technical comments since turning in a few weeks ago. I am thankful that even through this small vision, thank you very much. Appreciate that. Glad it could be of service. Another Oliver. Wayne Lambo. Okay. Trader Isaac, smash the like button. Yes, thank you very much. Franklin, hello, sir. Always a gentleman. I hope you had a good weekend as well. PODD. Okay. Let's see. Good. I'm glad, Joseph. Eric, hello, sir. Nicholas. Hello over to you in France. XLC, XLY. There's some strong indexes, no doubt. XLK, light volume though. Light volume on the XLK, nearing resistance. Trish, hey Trish. I'm not sure if you're a mother, Trisha. If you are, happy Mother's Day. And if you're not, to your mother, happy Mother's Day. Amerimigo 1, hello Bob. Hello, sir. Okay, let's take a quick stroll through the futures. Then we'll go over the economic data that's set to be released this coming week. And we'll talk about, hey, John. Happy Mother's Day, Tricia. We'll talk about the negative rates. All right. So a lot of what you saw last week was in anticipation of negative rates. And you saw price action on the dollar after the market closed on Friday, which is pretty bearish stuff. So my guess is that is related to, hello, thank you, Bob, for this wonderful stream. You're welcome, sir. Thank you. Okay, so I'm going to go to what Jay Powell is doing right now. I don't believe that we're going to see negative rates. I don't believe it. It'll be havoc. They want inflation. They say they want inflation. They don't want inflation. The negative rates will give them inflation, and I'll tell you why they don't want inflation in a moment. But let's stroll through the futures. E-minis down now, spot 37%, getting a little bit weaker here, but we haven't taken out the lows of the last 4-hour bar. So I'm not going to get all too worried here. I'm short. I'm happy, to be honest with you. Russell 2000 down over a half percentage point. Interesting. No shock here that we're getting a pullback. It doesn't mean we're not going to make a new weekly high. Frankly, I believe that we are going to make a new weekly high because of how we closed out last week. The mid caps down about spot 39%. Where's my gold? Gold. I didn't get gold teed up. How dare I? Whoa, what's going on here? All right, this is not updated properly. 1705. Oh, it is updated properly. We're down on gold. I'm surprised. I'm surprised to see that because the dollar closed out Friday's session pretty weak. Oh, look at this rebound. That's why. Okay, now it makes sense. You could see the after-hours selling pressure on the dollar was huge. And I think the markets are now beginning to figure out that Jay Powell does not want negative yields, at least not now anyway. And they're reversing the dollar, at least currently. It could fade for all I know. They're forcing the dollar up higher, and that's probably why you're seeing the weakness in the futures at current. But we'll go to the headlines, we'll go to the economic data that's scheduled for this week. We'll come back, and we'll see what's going on in a little while. So let's go. Headlines. Actually, no, let's go to economic data first. Tomorrow is the 11th. Tomorrow, nothing scheduled. This is going to be a biggie. On the 12th, NFIB Small Business Index. That's the measurement, the survey, the sentiment of small businesses. Usually a big number to watch. The CPI. Watch this. Do we have deflation? Do we have inflation? I predict that we're going to see, at the core, probably flat, and in line with what the prior read was. Why? Is that you're seeing energy still weak. It's come off of its lows, but you're seeing food prices move up a little bit higher. So maybe we'll get a bip up higher here on consumer prices. At the core. The core is X food and energy. The PPI, that's a measure of inflation at the producer level. Thursday, nobody paid attention to this report up until 6 weeks ago. And now it's all that people could watch. And we have to wonder, what was it, 5 million last week? People that were laid off, what will it be this week? And Friday, retail sales, big number, very, very big economic week. Empire State Manufacturing Index, industrial production, consumer sentiment survey, business inventories. So a big chock full of nuts week this coming week. Now, getting to negative interest rates, this was not on the calendar. As of, I believe, Thursday morning, they added it either Thursday night or on Friday. This speech here on the 13th by Jay Powell, it's believed that he needs to throw cold water on the pricing in of negative yields going out to, I believe, November, December, or else this could spiral out of control pretty quick. So expect him to douse. Yes, RL. Hey, RL. Jay Powell speaks on Wednesday. Yes. Hey, John. So expect him to throw cold water on that. They have other tools at their disposal. I don't think they need to go negative at current, because if they do, I mean, really what sets us apart from the EU, really, besides the fact we have a lot more debt. The only thing that sets us apart is that we don't have negative yields, and they can invest here. They're investing in our stock market. That's why you're seeing stocks move up higher. They're investing here in our bond market because they can get a yield. If they can't invest here to get a yield, well, why would they send money here? They'll just keep it at home or invest it elsewhere. So I don't believe that they are going to go negative on yields, and that's probably why you're seeing weakness, besides the fact we're due for at least a minor pullback in the markets. And heading into the week, talking about valuations, we're going in. This is the Shiller PE ratio at 27.43. Very, very expensive, but who cares, right? 20 million people laid off last month. Who cares? No big deal. Headlines. Goldman, they must have a net short position. 6 reasons why Goldman sees the S&P 500 sliding back to 2,400 by August. Now, they're not predicting a new break to new lows, but they're predicting a pullback and at least a higher low. Now, the one here that I see that they have a point, it is growing to be a bigger and bigger concern of mine, is this. The sixth and final one, global politics. And you're seeing the headlines really get chock full of tensions between the U.S., China, to a lesser extent Iran, But this one here, investors may need to contend with another twist to the U.S.-China trade strategic development, which was at the forefront of investor concerns much of 2019, the trade war, which is supposedly resolved. It was never resolved. Remember, we had a phase one trade deal. We never had a trade deal. Now we have to wonder whether or not they're going to follow through on the phase one. The nature of the tension seems to be multifaceted, ongoing, going between conflicts in merchandising and service trades, blah, blah, blah. In short, the rhetoric and tensions are growing more hawkish between China and the United States every single day. They kicked out some of our journalists. What did we do? After China forced out reporters, Trump hits back with severe restrictions on the Chinese media, of which they should. We can't, Twitter and Facebook are not allowed in China. You can't have free speech over there. Their media is all state-run, yet they're able to spew out propaganda through Twitter, through Facebook, through our media. It's time to put a stop to it. Here's another one. U.S. has limited ability to manufacture coronavirus treatment vaccines. Why? It's because it's all over in China. So we are in a really bad situation here with the Chinese. And we're short of China at current. Small position. I plan on adding to that position as this continues to ratchet up. And guys like Kyle Bass are out there, and they're talking. Kyle Bass is an extreme hawk against China. And I agree with Kyle. But Kyle is, I think, missing something. He says that we're at war in terms of propaganda. Yes, I agree. In terms of economic war, yes, we're intellectual property theft, etc. In terms of kinetic war, he doesn't believe that we're at kinetic war. I disagree, and I'll tell you why. If this disease occurred in that Wuhan lab, which I believe it did, and is in fact proven to be, or proven to have come from that lab, and the Chinese delayed notifying through the WHO, World Health Organization, that this disease was out there, I can't help but think that with tens of thousands of people now dead, at least here in the United States and around the globe, how that's not some sort of a kinetic war. So the argument can be made, and there will be those out there that will make that debate, and it's a valid one. You have two carrier battle groups that are offline at current. The USS Theodore Roosevelt and I believe the Ronald Reagan offline. So very, very strange times here between us and China, and they are pressing their power over in the South China Sea. And we are trying to push back, but our ability to do that right now is under stress. So this is only going to get worse before it gets better. Oh, the last phase of war with the Chinese, cyber. We've been at cyber warfare with the Chinese for years now. So I disagree with Kyle that we are not at some sort of a phase of kinetic war at current. So that's my own two takes. Let's go to some chart requests. Then we'll circle back to the futures. We'll see how we're closing out the evening. I do need to go off timely tonight because it is Mother's Day. I have my two kids here tonight too. So I have to be good as much as I like to talk stocks. They're trying to knock the dollar off. Yes, but they need dollars. That's their problem. That's their Achilles heel, is that they need dollars. Oil dropping? I'll check that out. We'll go back to oil in a moment. Trish, did you put anything? I didn't check the members' chart request. Did you put anything in there? XLC. XLY. Let's see what else we have here. Nvidia. I think I saw BA in there. I spoke about BA over the weekend. I'm not going to do it now. Yesterday on Best Stock Charts, I'll link to it at the end of this video, but it is posted on YouTube. Yesterday, I went over BA as a potential watch. The DBA, yes. Love the DBA. I meant to speak about that yesterday. Thanks, Eric. GDX. Okay. All right, let's go to PO. Hopefully I wrote this down right. PODD. Insulet Corp. Very nice. All right, so the reason why I put this resistance level up here is because that's where resistance is. We couldn't close above excuse me. This is a monthly chart. Let me backtrack. At current, still early in the month, we have put in a new monthly high. Last week, we tried to take out the prior month's highs. We were rejected. RSI's hooking up, Stokes hooking up, good stuff, exactly what you want to see. Not a lot of volume is noted on this right sidebar here. That's good. That means you have no overhead supply above, clear blue skies. The only thing you have to worry about, these guys that bought back here and the folks that bought up here so far this month, they're going to want their money back. So they're going to sell as soon as they get made whole again. Weekly chart, at least some of them. Here's that resistance level. So when I would buy here, tell me at the end of the day, PO, this is a nice chart. I like the setup here. Keep this active for the week. And if I would set up another alert here, if we broke out and above that 220 mark, I'd watch to see whether or not we close there for a day or two. So the plan here, what I would do, if we break out and close above 220 per share, I would look to open up a position. If we manage to rally up and through, let's call it 226, 227, thereabouts, up above this resistance level, I would look to add to that position, assuming that we close there. I'll pop this chart into chat. Hey, Pat. Futures are flat? Pat, I bet you cooked. He loves to cook. What was that you made the other day, Pat? He sent over a photo. A ricotta cheesecake that you made with the cherries on top. It looks so damn good. I call Pat the Renaissance man. He hunts, he gardens, he cooks. All right, so same deal here, daily chart, PODD. We're looking for a breakout. Same deal here. We close above resistance. You open a position. You add more on a breakout and a close above this upper band of resistance here. Just take note that this upper band in red is your upper band of resistance. Otherwise, I think we'll probably break out here. It's a good looking chart. But I wouldn't buy until we closed above 220 spot 15 per share. You cooked. All right. XLC. That's the wrong symbol. S&P Communications spiders. Interesting. I haven't seen these in a while. All right. I think we're going up higher because last week we excuse me. I keep doing that tonight. Monthly chart, we have broken out above this downtrend. We do have, maybe we don't, let's confirm it. All right, so immediately above, it looks as though we have, there we go. We closed right at resistance, 51.97. Where did we close? 51.87. We closed at 51.86, 1 penny shy of resistance. So we're right there. But I think if we close above that, let's call it $52 per share, we're going higher. Let's show this on all time frames. All right, it's already set. Good. Done. Let's go to a weekly chart. So what I want to do here is create an alert. Well, I don't care if it touches or bounces. I want to see it break out and above. All right, good. Daily chart. Yeah, we need to close above 51.86 per share. And I think we could head up higher. Check out the raindrops for the day. A very, very nice close. And I want to point out something else. If we get through this $52 per share mark, let's round it up. There's not a ton of volume above. So that doesn't mean, it means there's not going to be a lot of selling pressure above. So it should be an easy straight shot up higher. Friday's price action was very, very good into the close. This right side or a pregnant candlestick on Friday implies you saw a lot of selling, a lot of buying into the close. So that's very bullish. We like to see that. So I think that in all probability, we will continue higher this coming week. It's XLC, XLY. That's the discretionaries, I believe. Yep. Monthly chart. You could argue that we did this. That we broke out here. Now we're pulling back and we're doing a retest here. So this is a nice chart. I need to go to a weekly chart to identify resistance levels because this has been all over the place. Looks like we have resistance up here at 118.71. We closed at 117.26. Not a lot of room to the upside to put on a new trade here. Let's go to a weekly chart. Nah. We closed right at a resistance level. This is what I mean when I say that TrendSpider is like a spell check for technical analysis, because I wouldn't have picked this up. So we have resistance immediately above. If we close above 117.50, on a weekly basis, okay, then you'll probably see a rally up to 118.88. But still, not a lot of upside room here before you hit another resistance level to put on another trade. So I would probably avoid. Now, talk to me when we get above 120. That would be very attractive. Because from that point, let's go to a monthly chart. Back to a monthly chart. I mean, you get above that level, you're at clear blue skies. You have really no overhead supply, or you do have some overhead supply, but 130, 132. But not a lot of volume up there. It didn't spend a huge amount of time up there. So I think that you can get a nice rally. I would wait, though. I would wait until you get through these two resistance levels. Here at 117 and here at, let's call it 119. Once you get above 120, then it starts looking interesting. Daily chart. We broke out on a daily basis, but again, you're going to have resistance right here. You know, maybe we'll take it out. But once we get up here, that 120 market, a lot of volume up there. There's going to be a tug of war between bulls and bears once we get up there. So I wouldn't initiate a new trade here. Not enough reward for the risk I'm taking on, especially in this market. See how we closed on Friday. VWAP. Not a ton of buying into the close. 15-minute chart. Yeah, you saw some selling into the close. It's only a 15-minute chart, though. No big deal. I wouldn't put that much weight into a 15-minute chart unless you're day trading. So I'm not loving the setup here. I think it could easily go higher, but to initiate a new trade, I wouldn't do it. Not here. I'd rather buy on strength on a breakout. Oliver, I like those emojis, man. Okay, let's go to... That's not what I wanted to go to. There we go. Nvidia. All right, let's go. A very nice week last week. Now this is a monthly chart, but talking about it on a from a monthly perspective, we had broken out last month above resistance. What did we do this month? We pulled back, retested, it held. So this was resistance. It is now support. Beautiful. Exactly what you want to say. We have a new monthly high. So the path of least resistance remains up. Weekly chart, outstanding. Now, if you're looking for an entry point, if we happen to pull back here to around $300 a share, that's a retest of this breakout. That would be a good opportunity to open up a position or to add to a position. Okay. So it's a good looking chart. Alert set. Let's throw some monthly overlays here to see if we have any unwanted surprises. Well, we kind of already knew this, right? We have resistance up here. So just be aware that we have resistance at around $317.50 per share. Where do we close? 312.50. Just beware. If you're looking to initiate a new trade, I would really adopt the strategy I just laid out. Wait for that pullback and a retest of support. Enter there. And just keep in mind, you're going to have resistance immediately above at around 317, 318 per share. Bob, what about the news that Chinese president pressured who to delay virus information to the world? Yeah, that's from, I believe that's from German intelligence. They reported that. I read that this morning. So that's just another dilemma for the Chinese. I mean, they have a lot of explaining to do here. And they're on a propaganda mission to try to blame us. They're trying to blame the United States Army. And that's not going to work out well for them. So that's their call. But I think that you're seeing right now, the witnessing of the Chinese taking the proverbial gun and putting it to their own heads. It's not a wise move to make. And I'm not talking about we're going to attack them at all. I'm just saying economically, they're in big trouble. The only thing that could hurt us in terms of economic war with them is if Huawei, their Cisco Systems, their state-owned telecommunication company, makes headway into the European markets. If the Germans don't push back, if the Brits don't push back on integrating Chinese telecom into Europe, that's going to pose a problem for our military relationship. And that's exactly what the Chinese want to do. They want to drive a wedge between us and the Europeans. So I think we've already threatened the UK with breaking off some sort of military contact because they're integrating Huawei into their communication systems. You're welcome, Franklin. Daily chart, Nvidia. I digress there a little bit. But yeah, I read that, Pat. Serious stuff. Another log on the fire. It's only growing heat. Daily chart, nice breakout on Thursday. Friday, continuation move higher. We're going higher here. Again, that 317 to 318 level, that's going to be a resistance level. If you can get it in down here on a pullback, good stuff. Moving on to the GDX. On a weekly basis, we have gold that is in a very tight triangle formation. And the miners, the GDX, at or very close to multi-year highs. The GDXJ still undervalued. I plan on adding more to the GDXJ. We have been long. We will remain long. I don't imagine us selling unless we're just booking profits because it becomes overbought anytime soon. So monthly chart, GDXJ, multi-year highs. We're just shy of them. I mean, this month we've put in multi-year highs. And it looks as though we are going higher here. Now, you can see how TrendSpider is extrapolating out where resistance might be. And at current, if it was a straight shot higher, that would be at $38.19. Where did we close? $34.86. So GDXJ, still more room to run here. Daily chart. GDX. I'm thinking GDXJ because I own it. The GDX, more room to run. On Friday, we did see a reversal day off the highs. I don't see a reason to sell here. I think that the macro story is just so strong for gold, silver, that you'd be crazy to go selling these shares. The only thing that I would be concerned about, and I was asked this maybe last Sunday or Thursday, one of the two, about whether or not I would be concerned about a pullback on the miners if if the stock market sold off? And my response was yes. And I want to do this. They're trading pretty much in tandem right now with the S&P 500. Let's throw up a correlation. We'll go above. Yeah, you could see we've come off that correlation a bit, but we're beginning to flatten out. This is a weekly chart. Let's go to a daily chart. I think the correlation of late has been a lot tighter. Yeah, you can see we were higher. We pulled back. Now we're beginning to hook back up again. So we're between 75 and 50% correlated with the S&P 500 at current. They do diverge from times, but if we do see a sell-off in the S&P 500, I would expect that we would see some sort of a sell-off in the gold mining stocks. So at current, I'm not seeing the divergence, meaning the gold miners completely diverge from the S&P 500 as of yet, until it happens. And that's when if we begin to see the gold miners rally when the S&P 500 pulls back, then you can get confident and add more when the S&P 500 is weak, that we're beginning to see gold miners really begin to break away. At current, I don't want to make that call until I see it happen. And you saw it happen back in 2008. They broke. The S&P 500 continued to decline. GDX began to move up higher and diverge from the S&P 500. So that's the GDX. DBA. Let's use stock charts for this. That's the Invesco family. I want to go to a weekly chart because it was a really nice week last week. We went into last week. I was saying last weekend that this is my favorite chart going into the week, and we broke out. So agriculture definitely catching a bid. The downtrend is still not over. I'm not predicting that we're going to skyrocket up here, but it's looking pretty good. Let's go to a monthly chart. Yeah. For the first month in quite a few, we do not have a new monthly low. We're up on the month, no new monthly high yet. But I think we're going to begin to see a bottom here in the ag names, especially if the Chinese don't back out or we don't cancel that phase one trade deal. That should help put a bid under the ag names. And they became weak because of the trade war, because they were consolidating for many months back here. The trade war kicked in and the DBA broke down. And ever since that trade one deal, not much has happened. PCRX. And if I could ask, those folks just joining, if I could ask you to smash that like button, please. It helps me out with YouTube quite a bit. I get these kids with, Pat, is that the right symbol? PCRIX? Can you confirm that, please? I'll come back to you, Pat. PCRIX. It's not coming up here. PCRIX. Can't leave Pat out in the cold. Oh, it's a fund. That's why. Okay. You're welcome. My pleasure. Okay. It's a monthly view. It looks good so far this month. It's still in a downtrend, though. It looks good. It looks as though we're putting in a higher low. I wouldn't be a buyer until we closed out a week above $4.50. And then you could be fairly confident that we've probably put in a bottom. So we'd have a higher low, check that box. Then once we get that higher high above $4.50 and we close there, most importantly, we close there, then you could look to dollar cost average in. Looks good. I'm not sure. Oh, it's a commodity real return. I see. I see where you're going here. Yeah, it looks good. I like it. Thanks, Pat. Gotcha. Logi, L-O-J-I. Oh, Logitech. I haven't seen this chart in a long time. Lord knows I buy their products. All right, so monthly chart, beautiful chart. We broke out last month, this month, very, very similar to Nvidia in that we broke out last month. This month we pulled back, retested, and it looks as though we're going higher. And this is a play on coronavirus, and we broke out above prior resistance. What are we at, all-time highs here? Probably so. Oh, yeah. There's nothing not to like here. It's just really a pretty chart. Very nice chart. Back to TrendSpider. Let's go to a weekly view. All right, a bit of resistance above. Excuse me, folks. So if you're given the opportunity to get a pullback here and a retest of support, that would be attractive. We'll keep this active for a few days. I like this chart quite a bit. Now, I can't buy where we closed yesterday, so I'd want to see a breakout So we'll keep this active for the week. We'll see what happens. Daily chart. Yeah. Yeah, so that's the game plan. I would like to buy or open on a pullback, add on a breakout. No overhead supply above. Very little in terms of selling pressure above on a breakout. Very, very nice chart. Thumbs up. Probably one of my favorite charts going into the week, along with Nvidia. Pence has to do something. Oh, I think I read that. Two of his staffers had coronavirus. Hey, Will. Hey, Bob. Do you think they are cycling into? Yes, I believe I mentioned it on the weekend commentary because we were looking at the charts of certain sectors of technology and the semis, which had a very weak prior week. They really came back strong. And I think that you're going to see money rotate into the semis. And I think Nvidia proved that, no doubt. Oh, good point, Eric. Thank you. Logitech reports on Tuesday, so I would not be a buyer until that report came out. Even if they broke out, I would not be a buyer until earnings were out. All right. We have Trent. For whatever reason, they blocked your comments. VTIQ. Ugh. Is it coronavirus play? This is a tough one. This is not for the faint of heart. But if I were a betting man, let me take a quick look at the daily chart before I speak. Yeah. Where are my Bollingers? Why are they off? Okay. Yeah. So I wouldn't touch these shares right now. That doesn't mean it can't head up higher. I just think the risk is far too great. So the question obviously is then where would I? And where I would is right here. And the reason why I wouldn't go buying right now is that A, we're up and into the third standard deviation Bollinger Band. Never a good place to buy. Always a good place to sell. Keep it active for a couple of days. I don't think I'm going to trade it, but we'll watch it. I don't know enough about it, so I can't say that I wouldn't trade it. I'd have to look into it. So what we want to see here is not just a filling of a gap. We want to see a retest of what was resistance from back here in March, back here in April, again for a very, very brief time in May, and we broke out. We want to see that retested. We want to see what was resistance now act as support. Simple as that. Let's go to DKNG. I remember this one. Wow. It's not even worth talking about the monthly chart. Weekly chart. I mean, the easy money's been made here. We're up into the third standard deviation Bollinger Band in that neighborhood. I mean, for all I know, it can keep going higher. What do I know? But you had a bearish reversal bar on Thursday, inside day on Friday. You know, my guess is that we'll probably come in a little bit here. Probably right back down to this support level yet again at 1950 if you're looking for an entry point. But I would not be a buyer here. Let's take a look at a 2-hour chart. If you're so inclined, you're looking for a place to get in, watch for a breakout above this upper band of resistance on a 2-hour basis, retest, add, put a stop loss right below, and you're good to go. Otherwise, I would wait for it to come back and touch support on a daily basis. Too much risk. Franklin, 50 watching. Need to hit that like button. Yes, please hit that like button. Bonnie, hi. How you doing? It's been a while. Bob, do gaps usually get filled? Thanks. You know, I guess ultimately, yeah, they do. Is it just for the very purpose of filling a gap? You know, who knows? I think that more often than not, you know, you have so many people of like mind looking for a gap to get filled that it just becomes a groupthink type thing. You know, I wasn't one that was big on it for quite a while. And now, you know, I look for it to fill the gap. It's just a groupthink more than anything else. So I guess ultimately, yeah, they do. They usually fill gaps. Bob, last Sunday you said Carvana was a bad idea, but it went up 40%. Why do you spend time on charts, support levels, blah, blah, blah? It's you know, fine. What you have a symbol for Carvana? It's very simple. Why I look at charts. To answer your question, I'm not afraid to address it. Even if I was inaccurate on the call, does it make sense from a risk-reward perspective to have entered the trade? Or were you accepting too much risk? And that's why you use charts. You're welcome, Trent. That's why you use charts. So if you're saying that, yeah, I mean, come on. I don't own a stock. So what was last Sunday? The 26th. That's wrong. The 3rd. All right. Fair point. Okay, so I'll see the point where I could have said, listen, we bounced off of the 20-period moving average. You want to buy it, put a stop loss right below. All right? If you would have asked me on Monday, do I like this stock? My voice would have changed dramatically. The reason is because we flashed an outside reversal bar. I want you to think about this. After I said I wouldn't buy it, did we make a new weekly low or no? And we did. We made a new weekly low. So I wasn't wrong that it was not going to go down any further. We did go down further. But the story changed on Monday when we flashed a bullish key reversal bar and an outside reversal day. If I would have seen the chart at or near the close on Monday, I would have said, okay, game on here. It looks as though we're going to head higher. Volume could have been better. I would have said that, no doubt about it. But volume rose. Would I buy it here now? No way. I wouldn't buy it. Here's another Sunday. I'm saying don't buy it. Why? Different story. It's come too far, too fast. We saw topping action, meaning sellers. You have resistance above. So one day makes a big difference. So, you know, I don't have a crystal ball. The charts can only tell me where we're at a certain point in time in life. Last Sunday, we had closed out it was a bearish week. I didn't see the setup. I was concerned about a new lower low. We got it. However, the close on Monday was bullish, an outside reversal day. Had you come to me on Monday and said, listen, take a look at this chart. What do you think? I would have said, wow, it looks pretty good. My only concern is volume. So, you know, you can't be perfect all the time. So thanks for bringing it up, and thanks for giving me the opportunity to address it. And I hope I directly answered you. Home Depot. All right, I'm going to leave it off with Space. I went over BA yesterday on yesterday on Best Stock Charts. It's on YouTube. You can go check that out. Home Depot, car reported, sympathy with that trade. Trish, you want me to go over that, or no, you're just throwing that out to have a conversation? If not, I'm going to leave off with HD, and we're going to go to the future, see how we're leaving off here. I think Home Depot looks really, really good. The only concern I have is that we closed right at a resistance level last week. This is a monthly chart, but we're right at that monthly resistance level. So I couldn't say buy it here. So the obvious question is, when would you? So let's talk about that. And let's overlay the monthly chart, monthly resistance, all right? So we have that handy. So what I would do here is set an alert at 230.43. Oh. Okay. So just beware where we closed out on Friday. Just shy of resistance. Here it is again on a daily basis. And it's stiff resistance. Note the volume where we're at here. A lot of volume at this resistance level. So just be careful. If we get through it, then it's game on. No, they won't really set alert unless I'm on that time frame. So if HD breaks through monthly resistance, keep it active for a couple of weeks, and we're good to go. Ideally, though, we get a retest of support before you have to enter the trade. And that support level right here at 230 per share. Let's circle back to the futures. All right, going back to the dollar. The dollar's still holding those gains. Let's go to gold. These are 4-hour charts, folks, just so you know. All right, so gold's found a bid here. It's come off the lows. We're still holding 1,700. Hey, Tommy. S&P 500. Yeah, we're going to go positive. We were down. Now we're flat. The Russell small caps, flat. They've come off the lows. Bonds. Bonds are holding support. Oil. Oil's down, still holding support though. Nat gas. Nat gas was a disappointing week last week. So volatile. Nothing happening here. Bitcoin. Wow. Dropped like a rock. Big hit on Bitcoin. It was over 10,000 earlier. And with that, folks, I'm going to say everyone have a great night and hit that like button. Thanks, Trent, for reminding me. Everybody have a great remainder of your Mother's Day. Have a profitable trading week, and I'll talk to you soon. Be well.